Okay, what's up, noobs? Anyway, he's going to take us through everything. Just look at these charts. If you got rigged, welcome to the club. Okay, so how's that? As you can see, the bottom is $50. All right, that's what we're looking at. So that's your target. That's when you start longing. Okay, short all the way down to $50, and listen to Tony Vase. That's how you win this game. Welcome everyone to SA Crypto's fortnightly market analysis, and this is the inaugural episode with myself, James Preston, and SA Crypto's financial analyst, Graeme Tennant. Welcome, Graeme.
Thanks so much, James.
So I think it's obviously a very concerning time for a lot of people in the markets at the moment, and so hence now is the right time to begin with a show like this. We've been meaning to do it for quite some time here at SA Crypto, to take our podcast and move it into the YouTube and video space. So here we go. And I think after last night's serious break to the downside, violent break to the downside, it certainly is timeous that we get onto this.
I think finally we've got something to talk about.
Exactly. Yeah. Well, that's also the truth, isn't it? So for those that don't know, Graeme has been writing for SA Crypto for a couple of weeks now, going on 2 months almost, and he actually called this break in an article that he wrote 3 weeks ago, just looking at the very, very low volatility. The Bollinger Bands were tightening, and there was just nothing happening, which meant the more that nothing happened, the bigger the violent break would be. And obviously the question is if that's going to be to the downside or to the upside. And Graeme's bias was bearish. Graeme, you saw this coming. Tell us, what do you think happened? I mean, we saw a drop. So here's our chart. I mean, look at that red candle. That is frightening. I mean, from around $6,200 to right the way down to almost $5,000 US. Take us through what happened.
Sure. So, I mean, following on the previous conversations we've had and the articles that we have covered, the market in the last couple of weeks or months, we obviously saw this movement of the market which was contracting, and as you stated earlier, contracting markets, it's like a spring being wound up, and the longer and the more low volatility that market becomes, the more it contracts, the more energy is essentially stored, and when you do get a break one way or another, then you do expect the market to move quite substantially. And as you alluded to, I mean, it's nice to get a call right. I mean, I get plenty of them wrong. But trading is about probability, and it's not saying that it's not about saying this is what's going to happen and you look at a crystal ball and you put your life savings on that without any risk management. It really is about weighing up the probabilities and trying to make decisions from there. So although it's nice to get one right, making money is a lot more important than getting the call right, and that comes down to having a trading strategy. Your risk management is correct, and obviously trading that strategy regularly and to a specific method.
So for those that may be watching this in the future, this is being recorded on the 15th of November. This violent break happened in the late hours South African time, Central African time of the 14th of November in the evening. What was the main support zone that broke and sort of triggered the alarm bells for you?
So let's take a look at the chart. And this is a daily chart, so it goes back a fair amount of time, roughly towards the end of last year. And as we've had this year, we're still in a bear market, and I keep on saying that. I hear people speak about the bullish signs are back, and I was one of them. When you're looking for the bull to start materializing in the chart, it has to materialize in the chart, and you look for signs that the market could be turning. But you don't bet the house on it, or you don't make large trades until you get that type of confirmation. And if you look at this chart, we just haven't had the confirmation all the way along. And specifically in the last couple months, we've had a quite extreme contracting, and these two blue lines at the top and bottom show that squeezing of the price action within a very, very narrow range. And so we've got that contracting there, and then we've got the orange bar, which would be the long-term support line, which is around the 6,000 level, just above the 6,000 level, where it's been repeatedly tested. If you followed what we chatted about previously, I've been waiting and looking for a break of the support level to confirm that more pain is to come. And I think that this early break is more than likely the start of more pain. I don't think this is the end of it. I think we do go lower from here on balance of probability.
On what of probability?
Balance of probability.
On balance of probability. Okay.
Absolutely, yeah.
So let's just take a step back. You've been bearishly biased for quite some time now, because so this is the big high of that's late December, early
That's
January
right.
last year. I mean, so it's late December last year.
Yeah.
The big high, everyone was going crazy about when it almost reached $20,000. And since then, we've just had carnage. A couple of these times here, did you ever think that maybe we were out the bear markets?
So you saw the early signs of a potential turnaround, okay? But it's quite clear. I mean, if you just look at it on very simply, look for a higher high. So every single time, this local high point has been lower than the previous one. That one's lower, that one's lower, lower, lower. So until we actually break above one of these previous highs, then you can put your bull hat on.
Right.
So, I mean, for example, here, this was an area where I got quite excited, because that is an inverse head and shoulder pattern. There's your left shoulder, head, right shoulder. So a break of that neckline is a bullish signal. So yes, we did get it.
Here, so there's your left shoulder, your right shoulder.
Your head.
There's your head.
Yeah.
Okay.
So if you draw a line across there, that's called your neckline. You look for a break of that neckline, and we got a really nice buy signal to the top side. If you traded
and I know you would actually traded that.
I did, and I made a little bit of money off that trade, but that wasn't the big bull event. That wasn't the turnaround in the market.
Okay.
In order to do that, we would have needed to break that previous big high, which we didn't quite get to.
And so these ones here, for instance, this one here, in order to reverse this sell-off,
Yes.
it needed to go above that
Yes.
in order for this to reverse the market. So by here, we were already in a bear market, right? And then
absolutely.
in
That's a
order
big
to get out and reverse that bear market, we needed to break that again. So, okay, I'm following.
Yeah, so, and I mean, in trading terms, I mean, you can look at reversal patterns and continuation patterns. So a continuation pattern, like the name suggests, is a continuation of the existing trend. And a reversal pattern is a change of that trend. So although we got this reversal pattern here, which is inverse head and shoulders, it never materialized to a degree that would invalidate the macro trend, which is by that stage bearish. Okay, and at no point have we fully broken out of that bear structure.
Right.
And until we get a proper reversal pattern and an invalidation of the existing structure, or the existing trend rather, I remain bearish in this instance.
Okay, so now coming back to the bearish balance that you spoke of. Let's say for instance you were 60-40 bearish for the last couple of weeks.
Yeah.
What kind of position now are you in terms of more pain? You mentioned there's more pain to come.
Sure.
Would you say you're still 60-40, there's more pain to come, or now you're even more confident there's more pain to come?
Well, my target to the short side, because I am short now, is the 5,000 mark. I think that is the first target that's, in my opinion, is a fairly high probability we go to 5,000.
Okay.
It's a nice round number, and if we do look at the chart, that our previous highs from, now you need to look quite far back, because now we're in new territory. But if you look quite far back, there's a previous high around the 5,000. If you put your Fibonacci levels on, 5,000 should be an area of relative support. So that's where I think there's a decent chance that we get a bit of a bounce, and that's where I'll be looking to take profit on the short side.
Okay.
But from here, I mean, it's such an impulsive break, straight through that support level. I mean, it's like a knife through butter.
Yeah.
And
I mean, that's one candle.
Yeah, I mean, there's obviously exceptions to this rule, but on balance of probability, again, a symmetrical triangle is a continuation pattern. So what happens going into the triangle, you can expect to happen going out of the triangle. Okay.
That's interesting.
It's not necessarily always a very high probability outcome, but that is the general rule of thumb.
So what you're saying here is what's happened here can be repeated here.
It could. And if you're looking for a target, another way to do it.
So I have seen a couple of charts going around. We're looking at the distance between that high and that low applied here.
Yep. So if we measure essentially the distance from the top of the base of the triangle to the bottom, and then we project that level down, that's pretty low. If that, I mean, that level takes us.
Is that the same? Is that the same distance?
It is the same. We're on a logarithmic chart here.
Okay.
So that's
so
why
Oh, right, I'm with you.
proportions.
I'm with you, the proportions.
If
Okay.
we take that
You're
off.
scaring us here. You're scaring us here.
So that's without the logarithm. So that's
Okay, so that's more, I can see now it's
yeah.
even. So we're looking at solid support of 3.5. Just round up 3.5, so 3.6.
3.7. Yeah, for me, I'm going to be taking profit a bit more, well, a bit sooner than that. And then I'll wait for the next setup. You know, and then do we get a reversal type of pattern at some stage around the 5,000? Do we get a continuation pattern? Because, you know, markets don't move in straight lines. So even, you know, obviously this is an extreme scenario where we've just melted straight through that support level. But if we do get down to 3,500, which I think is well, I don't know if it's high probability or not, but if we do get there, it's not going to go in a straight line. In my opinion, that's very unlikely that we just go straight down. And generally, you're going to get some kind of clues along the way. Is this setting up as an inverse head and shoulders? Is it a bear flag? What type of indications is the market telling us on the way down? And then I'm going to, you know, play my cards accordingly at those different levels.
Right, okay. I think another thing to bring into play here is a lot of people may be watching this on YouTube saying, gee, you know, this is a financial analyst, he's used to traditional markets, he's obviously uninterested in the fundamentals of Bitcoin. But I know in our conversations you're actually quite excited about the fundamentals of Bitcoin and what it promises society.
Yes.
But you approach the financials of the market, the price of the market, purely from a non-emotional, technical point of view. Is that correct?
Yes, I believe that you have to, and I think that that's where you make your best decisions. Because in my opinion, especially in crypto, where at the moment it's an immature market, and I think that a lot of what happens in the market comes from market sentiment, and I think that your best bet at accurately trying to predict what's going to happen going forward is to look at the price action, and the price doesn't lie. You know, the fundamentals can be interpreted in all sorts of different ways, but the price is the price, and it's the same for everyone. So, in my opinion, it does level the playing field. And if you've got a strategy and you're disciplined in executing that strategy with good risk management, I think, you know, that gives you the best chance of being successful as a trader in this market.
So you spoke of now we're going to see less violent moves downward, but it's most likely going to be a downward move. What do you anticipate for the next couple of days and weeks?
So, look, I mean, we've already gone sideways for a little bit. I mean, since the initial...
So you changed that to the 4-hour chart,
that's
right?
a 4-hour chart.
Okay.
So we did drop down to around about... I mean, she actually went down lower than I actually originally thought, down to around 5.2. We then bounced back up to around 5.6. But yeah, I mean, this looks like a continuation pattern to the downside. We've got a bit of consolidation here. So once we initially had our downside break, we've got some consolidation in that area, and then another decent size spill to the downside. But we're still hanging on to these, you know, just some kind of support here at around the 3,400 mark. That seems to be where we found our support for now.
The 5,400 mark.
The 5,400 mark, correct. And yeah, I expect that we're going to see another break of that further, you know, further from here to around the 5,000.
In as violent a move as what we saw last night?
I can't call.
Because you were confident of a violent break.
Yeah. So the reason I was confident about the violent break is because it had that price compression.
Okay.
Now the price compression is pretty much, you know, the energy has been lost. So now we need to see what setup we get from here.
All right. Okay. So basically, I mean, you've spoken about this for quite some time. We're going to get a violent break, James. We're going to get a violent break. Would you say we had our violent break?
This is it. That was the violent break. I mean, you can't argue with that. That's just gone straight through that support, and that support held for a very long time. You count how many times it's been tested, 4, 5, 6 times at least, I think, that support zone was tested without being broken. So the buyers there were very strong for a long time. Once that is moved out the way, then yes, I mean, it can only move quickly through that area. And now the question is that the first impulse leg? So that's a term that we use. So that's almost the initial move of high momentum or high energy in a specific direction, which we've got now. Now, what does that result in? Does that result in further downside? On balance of probability, yes. So that's why I remain bearish, and I expect this to be the first impulse leg in further downside moves. Okay. But again, the alternative is that this is just a temporary sell-off, and now you get some big guys seeing the opportunity and really coming and buying us up and then pushing us back above that support. Now remember that this support level should now turn into a resistance zone.
Okay.
So I think there's still a decent opportunity that we actually bounce from here back and then test this support zone. And at this point I'll be looking to go short, most definitely, because that's a really nice area to short once we get a retracement. Remember, in a bear market you want to sell the bounces, and in a bull market you want to buy the dips.
Yes.
Okay. So if we get a nice bounce here into this support now to resistance zone, I think that's a very high probability short trade.
Okay.
Yeah.
So there we go, guys. That's the inaugural video version of the now fortnightly market roundup. And Graeme, thank you. You can ask Graeme any question. He analyzes almost any market that is viewable on TradingView. And in one of his recent write-ups, he spoke about silver as a commodity, comparing silver with the Bitcoin market. So if you have any questions, it's at Graeme Tennant, one word, eh?
Yes.
On Twitter, GraemeTennant.
That's right.
We'll put it. You see, we'll put it on the screen there. Check him out. Ask him any question you like, and we'll be sure to take your tweets for the next episode. Graeme, thank you again.
Cool. Thank you, James.
So of course, guys, don't forget to subscribe to our newsletter. We provide all the latest in blockchain news from here in South Africa and around the world. So once a week, short roundup with the highlights of what's happened in the blockchain industry, and of course the lowlights in a very short and punchy email newsletter that goes out. All you got to do is log on to sacrypto.co.za and enter your name and your email address. A little pop-up box will come up on the bottom right, or look for it on the sidebar if that pop-up box doesn't pop up. We try to keep it as non-intrusive as possible, so you may have visited the site already and it now no longer pops up. So check it out on the sidebar. Also, please subscribe to us here on YouTube. We're going to be making a lot more videos like this. And as you can see, we have an incredible asset in Graeme. We'll try and get Crypto Eddie back out of hiding. We'll have him on the show, and we'll be interviewing people and really making this as much of a video resource as possible. So be sure to check us out and subscribe on YouTube. Check us out on Twitter and Facebook, and of course on our website, sacrypto.co.za. For me, James Preston, cheers.